All right, Kyle. I'm so glad that you're joining me on this lovely day.
Yes, thank you for having me.
Absolutely. You have always been someone who has served our clients in such an incredible capacity. You have the client's best interest at heart first, and you're not someone that's going to ever guide or lead someone down a path that isn't right for them. So I think in this time that we're all dealing with right now, I would love for you to kind of just spell out some things that you're seeing in the market, some of the changes that have been as a result of what's happening with COVID-19 throughout the world, and how that's affecting lending and what you're seeing. So first things first, I think something that's been on everybody's mind. Actually, before I do that, I want you to introduce yourself to everyone so they can get a sense of who you are without my introduction. So
Sure. Yeah, no. And gosh, thank you for, like I said, thank you for having me. And I think that's probably like the nicest thing anyone's ever said about me. And that means a lot to me professionally that you think of me that way. And, I feel the same about you as, you take care of your clients, you lead with love and guide people, to the right decision. You don't sell them, and we, provide a great service as a team to folks. And so I think that's why we do work well together. So, but yeah, and I'm just a mortgage lender. That's plain and simple. It's not super sexy. We do loans, and we get people into homes, and I've been doing it for about 6 years now, and couldn't see myself doing anything else. Love what I do. Never saw myself being here, 10 years ago, but fell into it sort of, and I've loved it every day since.
I love that. Isn't it true? It's an incredible industry to be in, to serve people the way we do. It's a privilege every day. Absolutely.
Yeah.
So, okay. COVID-19, we've seen, obviously, the government has come in and provided some framework for stimulus. We're seeing people who have lost their jobs and have come upon economic hardship right now. We're seeing mortgage relief for folks as well. But I think there's a nuance that doesn't always get talked about in great detail, and that is forbearance versus deferment. And so I would love for you to be able to speak to, what does someone need to do, or where does someone need to be to actually require that assistance? Who is it right for, and who is it not right for? I let you take it from here.
Right. Okay. And as far as, just to start, as far as like the delivery of the information, I think, where we get most of this information from, obviously, is the media. And I'm not on one side or the other. I'm not a super polar person, but like the media will talk all about, they're all about sensationalism, right? So they're going to give you the worst and they're going to give you the best, right? And they're in between. So like if it's, we're talking about COVID, we're talking about the virus and all these things, they're going to give you the worst and make it the worst thing possible. And they're not going to talk about, necessarily the great things that are happening because of this, or, the improvements that are being made and testing and all these other things or whatever. And when it comes to forbearance and mortgage deferments and stuff like that, they're going to give people that information because they know people are going to go wild for that. And they're like, oh my God, I can skip a mortgage payment. I can save some money while I'm out of work, or, whatever, or severely reduced on income. And they don't necessarily talk about the opposite side, the flip side of that coin, to talk about what happens when you take advantage of forbearance or deferment or loan modification, because they're the media. They're not mortgage people, right? So they're like, okay, great, you can go skip your payment, but they don't know what happens when you actually take advantage of that. So I've been trying over the last couple of weeks to get this information out to folks as well, about what forbearance is, how servicers are handling it, and what it could mean for you in the future. So in general, forbearance is not deferment of your payments. It is not forgiveness of your payments. Forbearance on any type of loan. So in my experience, I got forbearance on my student loans when I was younger. And so I was able to not make the payments, but the interest still accrued.
That's right.
Forbearance for a certain amount of time because I had lower income and things like that. But those loans still accrued interest, still gained principal, and it put me into a worse situation than I would have been in had I just started making the payments. And it's similar to what we're going to see if a lot of people take advantage of forbearance. The difference between a loan like a student loan or an auto loan or something like that versus a mortgage is usually when you have a student loan, or let's just take an auto loan, for example, that you pay for your auto loan to. Let's just say it's Wells Fargo, right? They have your loan. They secured the capital for that. They are lending, $30,000 to you for that asset, for that liability, for that car, right? And they're not having to make any other payments to anyone else for that loan, right? You're paying that money. When it comes to mortgages, that's not the case. When you have a mortgage somewhere, there's mortgage insurance expenses, there's insurance, escrow accounts, things like that, that all still have to be paid on time, and they're still going out the door, even though the aren't getting their payment from you in forbearance. And so that can cause a liquidity issue. You got money going out and no money coming in, that's a bad day.
Right.
So that could affect the mortgage servicing industry in a big way. But what we want to focus on, I think, is more like what it's going to do to affect the consumer, right? So forbearance, on a mortgage. So there hasn't been a situation like this where it's been on a mass scale, I don't think ever. But forbearance in general, if you do take advantage of it, is going to be handled a few different ways by different mortgage servicers. And I looked into it from my mortgage servicer, who at the time was Mr. Cooper. And they had 3 options of how you could get through forbearance. They would forbear you up to 90 days without any explanation, almost give you 90 days forbearance. So you don't have to make your payment for 3 months. But then after the 3 months is up, let's just say you don't make your April, May, and June payment.
Yeah.
July, you're going to have 4 payments all due at once. And so say I pay $1,000 a month. That's 1, 2, 3. That's a $4,000 payment in July.
That's right. Which is something I think that people don't know, that nuance. And if someone is requesting forbearance for economic hardship with no guarantee that, if, let's say, for example, it is an unemployment issue, with no guarantee that employment is going to be back in place, sometimes forbearance can be so detrimental to that person's livelihood because of exactly what you said. Now you owe 4 mortgage payments instead of 1. So what are some alternatives to forbearance that some servicers, I know that not all are created equal and not everybody offers the same. What are other questions that a homeowner can ask if they are in financial crisis? What can they ask their servicer aside from forbearance to see if it's available to them?
So with the whole forbearance topic, there are some other things that are some other ways that it can get paid back, essentially. So if you do forbearance, like I said, it can be all due at the end of it. After 30 days, you owe 4 payments. 93 months, you owe 4 payments. That's bad, right? People that are out of work or severely reduced in income, how are you going to save $4,000 over the next 3 months if you don't either have a job or you went from making 60, 70, 80, 100 grand a year to now you're driving for Uber Eats and whatever you can do to make ends meet, and you're on unemployment, fraction of your income. It's not going to happen. So like I said, all servicers are handling it a little bit differently, but generally what we're seeing is that they're allowing, like I said, a lump sum payment at the end of your forbearance period, or they might extend it due to, if you're still in hardship, whatever it may be, then still going to compound the problem. They may increase your payment to make up those lost payments over a certain amount of time. And that could be problematic for someone too. Say they want to go back to work, but they get a new job and it's not as much as they were making, or they have to start back at the bottom now and work their way up. Their salary isn't the same. They can't, afford a $500 a month more mortgage payment than they were making.
Right.
That could put someone in a bad spot, and then that could lead to a foreclosure, missed payment, bankruptcy, terrible delinquencies on your credit and things like that. So I don't want to put ourselves in that situation either. And then the third option mortgage servicers offer is, after forbearance is over, if you can't pay it back in a lump sum and you can't afford a alternate, mortgage payment plan, they will do a loan modification. Now, loan mods in the past have been, in my opinion, predatory, notoriously predatory, because they won't even talk to you. They won't even take an application. They won't even hear you out about a loan modification unless you're already 30, 60, 90 days late.
That's right.
And so now you're in a hole and you're stuck to whatever they offer you, right? So loan modification has always been looked at as a derogatory mark, similar to a foreclosure or bankruptcy. So like if we, as a mortgage bank, were going to underwrite a loan for someone that did a loan mod 3 years ago, that would look like they couldn't make their mortgage payment at that time. There would be an explanation for that. It would be looked at negatively. So all those things go into play. Is if you take advantage of forbearance or deferment or do a loan mod right now, it's going to affect you far into the future.
Absolutely. Do you see that, a lot of people, when those terms started to bubble back up, obviously in the last few weeks, once the unemployment rates have started to increase, a lot of people, of course, think automatically that we're in the same crisis we were in 2008. Which so many people, in our industry, were able to speak to why we are not in that situation right now, for a myriad reasons, why the two are not the same. But I think that a lot of people don't always realize what questions they are supposed to ask and how it is so imperative that if they are struggling, it's best to ask sooner rather than later. Do you still feel that that's the case, that folks need to be proactive about it and try to head it off at the pass if they are in those circumstances, to head it off at the pass versus waiting to go late and then trying to ask for help?
Yes, absolutely. Because just like I said, in the example of a loan modification, you don't want to dig yourself a hole and then be forced or back yourself into a corner essentially and be forced to take whatever options they give you to get out. You want to reach out proactively, like you said, either to you as their realtor or to me as their lender, to determine what options you do have while you're not late. Because if you miss a payment, now you tanked your credit score. Now you're going to be in a worse spot to maybe refinance. And a lot of people right now, there's, I think, 53.8% of Americans have significant amount of equity. I think over 40% equity in their home right now. And so that is a huge, huge opportunity. Maybe not ideal, but that's a lot of untapped cash in people's homes that, as long as they don't have a missed payment yet or anything like that, or they haven't applied for forbearance, or they're doing, a loan modification or anything like that, as long as they are still in good standing credit-wise, you should be able to refinance your home, possibly get a lower rate, and pull cash out to float you through this this time. And there's a lot of untapped equity there that people can use to get through this.
Absolutely, which is the good news in all of this.
Yeah, and the thing about that is you have that option right now if you don't go down a bad road, if you don't back yourself into a corner. So yeah, like you were asking, be proactive, reach out, ask professionals, what are my options? What can I do to get through this? Here's my situation, and there's no judgment from us. We deal with this every day. Our job is strictly to give you your options and the information that will allow you to make the best decision for your situation.
That's right. And that is what it's all about. We want to make sure that people have accurate, up-to-date information to protect them and definitely to protect their best interests, which I think is huge and so important, especially, it's always important, but especially now. Speaking of refinancing, I know that, rates have obviously gone up a bit since before, at the beginning of March, things look different than rates do now.
Sure.
However, historically speaking, we still have a very low interest rate. What, if someone is looking to refi right now, can you just outline, some people think it's just as simple as I'm going to refinance my loan, I'm going to have a lower payment, and that's it. A lot of folks don't understand that there are closing costs involved with a refinance, as well as it also depends on how long they're planning on staying in their home, if it's beneficial for that. So can you just touch on what kind of your top things to look for in whether or not a refi is best for a homeowner?
Sure. So, and it's funny that we talk about this and that we're on this call today, and that you bring up the interest rate situation, because March 4th and 5th, I think, were the 2 days where interest rates were actually historically the lowest they've ever been in recorded history, right? Since like 1972 when we started tracking mortgage rates. So that was awesome. But that was a 48-hour window of opportunity where everybody, pretty much anyone who had a mortgage ever, could definitely refinance and get a better rate, right? It was crazy. But 4th, 5th comes along, and then on the 6th, I think everything really popped off about this COVID stuff, and the markets just went crazy. And we saw a very sharp increase in mortgage rates at that time, because banks just didn't know where normal was, because a lot of interest rate pricing is based on the stock market and the bond market and how money flows between the two and things like that. So with all of that volatility, it's hard for investors or banks to set a normalized price. So they hiked rates to protect themselves and just kind of left them there to not react too quickly, right?
That's right.
So that being said, now that we're here, it's April 16th. Yesterday, looking at the Mortgage Bankers Association and all that stuff, they take, weekly polls and stuff like that of where interest rates are and stuff. And we actually hit the new all-time low again yesterday. So that's to say that mortgage interest rates are back down to where they were on the 5th and the 6th. So now, again, we're into sort of an opportunity window. But we don't know how long that's going to last. It could be another 48 hours. It could be a week. But as soon as something happens, some news breaks about, COVID being, under control or whatever, a lot of money's going to go back into the stock market, and interest rates are going to go back up. So, it's a very fluid market. Now, as far as refinancing goes, at any point, it could be beneficial for someone, whether rates are where they are right now, or whether it's 2 months from now and rates are wherever they're going to be at that point. It's all about the person's financial situation at that time and what we can offer them and what their plan for the home is. So a couple questions to really ask during a refinance is, what do I need? Like, what am I trying to accomplish here? Do I just want the lowest rate and the lowest payment possible? Great, we can accommodate that. And there's a few different ways to structure the loan with that. Do I want to pay the loan off as soon as possible? Do I want to shorten my term? Do I want to save money on interest over the life of the loan? Great. In that case, you probably are planning on being in the home for a really long time. So that's where that will be beneficial, because if you shorten the term of your loan, usually you increase your payment.
That's right.
And then another question is, what other debt can I pay off? What can I refinance other than the home? I've got $20,000 in credit card debt over here that's costing me, $500 a month. And I can refinance my home and roll that $20,000 in at 3%, versus 18 or 20% on the credit cards. Now I'm maybe even keeping the same mortgage payment, but I'm reducing my credit card debt by $500 a month. So, maybe you didn't lower your mortgage payment, but you reduced your overall outlay of cash by $500. If I told you, without doing anything, if I told you at any point that I can save you $500 a month, you just tell me when, you would absolutely do it, right?
Who doesn't love to save $500 a month? I mean,
exactly. And,
but
and
I
some
think
of these,
don't you think, I don't mean to
no, sure, go ahead.
jump on that. I think, though, something you said just a couple minutes ago is key. And that is that it's really about focusing on where someone is. It's meeting someone where they are in the moment. Yep. And that even in this time, this is not going to negatively affect everyone. There are many people will come out of this experience actually better financially. Of course, there are people that are suffering, but there still is always the other side to that. And that the financial decisions can't always be made, they're not always made, or can't always be made, or shouldn't always be made as a response to what's going on in the world. That there are people right now that need to buy and sell their homes, whether or not we're doing virtual showings, whether or not we're in the middle of handling the current crisis at hand. There are also people that need to change jobs. There are people that need to relocate. There are people that need to still buy cars, etc. So I think to me, that is the takeaway that I think is so critical for people watching to hear is you have to take your personal situation and partner with people who can help advise and guide for what's best for you in the moment. Because that to me is what is huge in all of this. Is really staying focused on what your circumstances are, not necessarily what you have to take into account what's going on in the world, but you also have to do what's best for you and your family.
Yeah, absolutely. And I think Warren Buffett said it the best. I was watching his interview last week or two ago. He does his annual shareholders letter every year, Berkshire Hathaway and all the shareholders. And then after the shareholders letter goes out, they do an interview of him about the current market in that year. And I was watching it a couple weeks ago about the current market now. And basically he was saying that, no matter what is happening globally, what is going on with this crisis and this pandemic, the 10-year outlook for businesses has not changed. Right. So you can also apply that to most people's personal lives too. Like your 10-year plan, your 5-year plan, whatever it may be, has not changed based on this 2-month period that we've been in so far of the pandemic, right? You still want to provide for your family. You still want to send your kids to college. You still want to do these things. You still want to get a better job. You still want to buy a house. All those things are still available to you, right? So that was number one. And then the second takeaway I got from him was nobody can speculate as to what's going to happen in your town, in your in your state, in your country, or in the world, right? No one had any idea that this was coming. And we also can't speculate, where interest rates are going to go, where gas prices are going to go, any of that stuff. Like we can guess, but we're never going to be able to predict it, right? But what we do know is whether we're getting a good deal or making a smart buy or a decision at any given time, right? So right now, let's take the stock market, for example, right? So if Boeing was $100 a share before this all happened and they're $60 a share now, like I said, that 10-year vision hasn't changed for them. Are you getting a deal on Boeing right now? Sure. Interest rates and mortgages and refinances are the same thing. Could you have refinanced last year at 4%, 4.5%? Sure. Could you refinance right now at 3%? Yes. Are you getting a good deal right now? Yes. Take advantage of that. Is saving $140 a month on your mortgage sexy? Is it a quality of life changer? No, maybe not. But, it's still $140 less a month that you don't have to pay. If I told you could save $140 a month on your car payment, you do it, right? Give you the same car, all that, and you just save $140 a month less on your same car, you would do it, right?
That's exactly it. It is so true. And I'm so grateful that you are able to share this information in a way that's, first of all, very digestible, that is really just speaking to the situation at hand and the facts of what's going on right now. As much as it is not the right time for some people, it's also the right time for others. And I think if anything, this time has really illuminated the fact that those are universal truths, no matter what we're going through. It's a good time for someone. It's not a good time for someone else. And so as long as you're staying focused on your family, focused on what you need, on what you're doing. And I think in terms of housing, obviously that your income is stable. At this moment in time, do all of those factors come together to help to inform that decision? And if we can do our job that way, then we're doing the right thing, which is really, truly taking the individual and caring about them, not just a big picture that is impersonal. And there's no one size fits all.
Just absolutely. We see that every day. Every loan is different. Every person's credit is different. Whatever,
right.
Whether a refi makes sense for someone or not is always different between two different people. And like you said, I think it's about taking the opportunities you have at hand at the moment and taking advantage of what puts you in the best scenario 5 years from now, or whatever your time horizon is. Going back to the refis, doing a refinance right now for someone, person A that's going to live in their house for the next 20 years. Okay, great. Yeah, great idea. Break even on your loan is 3 years. You're going to live in it for 20 years. You're going to save a ton of money. Great. Doing a refinance for, let's just say, someone exactly the same qualified as this person that's only going to live in the house for 2.5 years, and they're going to sell it, or they're going to move or relocate. Not a great idea, right? So it just all depends on what do you have available right now versus what goals do you want to accomplish in the future, and the time horizon for those things.
I love it. I love it. I appreciate you. Thank you for just taking the time. Yeah. And please let people know. I'll obviously share as well, but how people can contact you if they have questions, because I'm certainly not a lender, and that's your wheelhouse, my friend. So how can people contact you with questions?
So they can get a hold of me. I always have my cell phone on me. It's my number is 251-538-0875. You can call or text pretty much anytime. And if email is more your speed, it's Kyle S, KYLES at VIPMTGINC.com.
I love it. I love the 3-letter increments there. That's good. I will make sure to also share that with everyone. Thank you. And thank you for always putting the client's needs first. That's the name. That speaks so highly of your integrity. And I know it's the only way that I want my clients treated. So thank you for that.
Absolutely.
All right. I appreciate it. And as they say, it didn't come to be, it came to pass. So It's just a matter of time, isn't it?
That's right. This too shall pass.
This too shall pass. Absolutely. Thank you so much, Kyle. I appreciate it.
Thank you.
All right. Talk to you soon.
See ya.
Okay.
Bye.
Bye.